The federal takeover of startup-focused Silicon Valley Bank is the largest failure of a financial institution since the economic collapse of 2008. Ann Makovec joins us now to explain how this all happened and what happens next. Ann?
Yeah, that's the question on a lot of people's minds. So as of this morning, Silicon Valley Bank, or SVB, is now under the control of the FDIC. That means the bank's assets will likely be liquidated in order to pay back its customers. But a lot of people still stand to lose big.
The bank is closed to the public today, but here you can see FDIC reps outside talking with customers who are trying to withdraw money.
How concerned are you? How worried?
I'm pretty concerned.
The earliest they could see that money is Monday, but the feds only insure up to $250,000.
We had more than 250 in this in SVB.
Silicon Valley Bank is a lender to some of the biggest names in the tech world. Now many are concerned this collapse could lead to a ripple effect.
The impact of the failure of Silicon Valley Bank is going to be widespread through the technology sector, both here in the Bay Area, across the United States and internationally. Silicon Valley Bank was an ally for all of us in the technology sector. Thousands of companies still have millions of dollars locked up in the bank.
But U.S. Treasury Secretary Janet Yellen met with banking regulators on Friday and expressed full confidence in their abilities to respond to the situation.
There are recent developments that concern a few banks that I'm monitoring very carefully.
White House economic advisors say safeguards are in place to prevent any additional damage.
With the reforms of the global financial crisis of 2007, 2008, we've put in place stress tests and other tools that our regulators have to provide more resilience to our banking system.
Some tech startups started pulling money from the bank earlier this week when SVB announced a fire sale on its bond portfolio to plug a multi-billion-dollar hole in its balance sheet. The question now, will that gap erode confidence across the industry?
You've got to put your money somewhere. Under the mattress or in Bitcoin is not what you want to do as a prudent investor or operator of a company.
At least two Bay Area Congress members are promising action already. Dublin's Eric Swalwell hinting at a bailout. He says he's working with his California colleagues to protect investments above $250,000. And San Jose's Ro Khanna says he wants to make sure the bank's customers, tech startups, and their employees are protected and paid. Liz.
All right. Here to help break it all down for us is Corey Driebush, who covers U.S. capital markets for the Wall Street Journal. Thanks so much for joining us. First, can you tell us why and about why the Feds decided to move in today?
Yeah, so this was all very fast and very surprising. On Wednesday, the Silicon Valley Bank was solvent. And then there was a lot of concern and worry about they were doing a share sale, said they needed to raise money, a couple $2 billion. And so according to filing, customers tried to pull $42 billion on Thursday from the bank. And that just led to the bank not having enough capital as of Friday morning.
Yeah, pretty devastating for the companies there. Obviously impacting a lot of folks, a lot of companies here in the Bay Area, even those who aren't doing business directly with Silicon Valley Bank. What sort of impact do you think this is going to have? Do you think this is going to lead to companies closing, potentially more layoffs?
Well, I think right now everyone's in a little bit of between a panic and wait and see mode from the founders that I've been speaking with and corporate executives, as well as other bankers. It seems that everyone wants to see what happens on Monday. That's when the FDIC is going to open up and let depositors start accessing some of that cash. And right now there's more of a worry of how quickly companies that had their cash at Silicon Valley Bank are going to be able to take out that money or access that money, because right now it's basically frozen.
Now, we mentioned that this was the biggest bank collapse since 2008, the financial crisis then. What are some of the key similarities or differences between these two situations, though?
I mean, anything can happen, but right now, the people we're talking with keep pointing out that Silicon Valley Bank is a different animal than a lot of banks out there. it was very niche. A lot of founders loved it because they felt like they were really taken care of by the bank. But the customer base was mostly high growth tech firms. So it's a very different group of customers versus most banks are more, as you could say, more diversified in their customer base. So not obviously we've seen a lot of impact in the tech sector lately. That's been hit a little bit harder than other sectors. And so perhaps that's why Silicon Valley Bank was hit a little harder as well.
Corey Drebush from the Wall Street Journal, thank you so much.